What a year it's been. And we've been talking about it, the fact that Wall Street, really so many on Wall Street got it so wrong this year. But you started the year, I guess back in December of last year, with a price target year-end on the S&P of 53.30. That's a 1,500-point differential from where we are right now. I want to get your thoughts on how that estimate got it so wrong versus where we're poised to close today.
Very simply, Morgan, and thanks for having me on the show, is in December of 2021 when we put that target in, the S&P 500 was ticking higher. The Fed had fairly well announced that it would be accelerating its tapering program in the first quarter with likelihood of raising rates. But what couldn't be seen was the aggression of, the aggression of Russia into Ukraine, which disrupted oil prices, which is central. Oil prices are core to inflation. And then in addition to that, of course, zero tolerance to COVID by President Xi in China, which further delayed the supply chain recovery. And with that, it was a great boost to inflation, making the job of the Fed harder. And as a result, they were more aggressive. That said, we did bring down our target. I think mid-year we came down to 4,800. Then we went down to 4,400. We went to 4,400 for next year and 4,000 for this year. So, the Bears have had it this year. They were wrong for almost 13 years, notwithstanding some pullbacks that were, I think the worst was in 2018 when the S&P was down, I think it was 19.8 or something, just brushed against a bear. But what we've got to say now is, this reminds us of the setup for 2009, where the Federal Reserve had taken actions. No one believed that the Fed would be able to get the economy to recover. First quarter of 2009, market was down 27%. Hopefully that won't be the case this year, okay? But then the S&P rose from March 9th to the end of the year, something like 63%, and I think tech was up something like 80%.
Next year is going to be... So you think next year is going to be an up year, is what you're telling me?
Yeah, I think, and I think it's going to be a modestly higher, a little bit richer higher. I was thinking 10%, to 4,400, but at that time the market was rallying on that October rally somewhere in there. But I would think, 10, 12% upside from here would be highly likely as the Fed should the Fed be able to prove that indeed it can pause inflation. We don't think the Fed will pause, at least in the first half of this year. We don't expect the Fed to start cutting rates in the first half of the year, but we think the increases will be more modest. The data that has been released just this week is mixed, some hotter than expected, some weaker than expected. That Chicago number, as I recall, was a little bit hotter than expected. But the housing numbers, that's really come down. If you look at the Case-Shiller on a month-over-month, it was down in the teens, as I recall. So I think what's happening is we've got the big issues, and I think it was mentioned earlier on the show. It's about the consumer and it's about jobs, how we move forward. But the risks still remain. China's has stopped the zero COVID policy, and in the process of that, there's a risk of a pickup there. What's that going to do to the rest of the world? And you've also got the idea that related to jobs, is this going to affect jobs hard? Thus far, no. I still recall there's about 1.79 jobs for every person that's unemployed if they wanted the jobs.
Okay.
John, really so much of it boils down to how fast does inflation come down? Because that'll just determine whether the Fed can truly step back, whether they really feel like they don't have to do more damage to the labor market, and maybe can support equity valuations better. So what do you think actually is going to be the path of inflation?
Yeah, I think we're going to see the path of inflation show what it's begun to show already in the fourth quarter, is that indeed the Fed does have effect. Hopefully, politicians in Washington will be able to keep their hands off the till, so to speak, and we won't have a lot of fiscal stimulus coming to offset the positive efforts of the Fed. And, you know, the one thing this year that's never been mentioned is really the politicians, both from right the start of the pandemic in 2020, when they started taking action, as well as the Biden administration, they overdid it in adding stimulus when the Fed was doing the job, and the Fed has taken the blame for most of this. And I don't know, we've been big believers in the Ben Bernanke legacy Fed, which we still think is alive and well with Jerome Powell.